seeing in the sessions overnight, what it means for our local market today. We're joined by Stan Shamu from IG in Melbourne. Stan, great to see you. Firstly, I did just want to ask you about that credit downgrade for Spain's debt coming through from Standard and Poor's. What did you make of this? It's cut it to the sovereign credit rating 2 notches to BBB minus, just above that junk status.
Morning, Bridie. Yeah, absolutely. It was a fairly quiet US session, apart from obviously that caution ahead, that caution following Alcoa's result, and of course Chevron's results as well. But it does seem like risk has started to move a little bit. Of course, that downgrade kicked in at about 8 a.m. this morning, so it's not too long ago at all. And we did see that 2-notch downgrade to BBB minus from BBB plus with outlook negative by S&P on Spain. Of course, a lot of people had been waiting for some sort of a downgrade or some sort of news on Spain's credit rating for a while now. Of course, it had held back a lot of the bulls from buying the euro, which had sort of stalled at around 1.3 and held at about 1.29 last night. Now this downgrade is essentially taking it down to about 1.286, and it does seem like we could continue to see it slide into that 200-day moving average at about 1.282. Now we might see some buying sort of kick in at that level. It's held over the past couple of months, but it does seem like a lot of traders are running out of reasons to keep holding this euro into these levels. Of course, we haven't really heard any positive rhetoric from the European leaders. Angela Merkel has been in Greece trying to sort out a few things and obviously reassure markets that Greece will be staying in the euro, but we're yet to hear anything concrete without that Troika report. So that's probably the next catalyst for the euro. Of course, we will continue to monitor Spain's yields to see if they will need that bailout or request that bailout soon enough and appease markets. Of course, that's been another catalyst for the euro over the past few weeks, and it has really seen it just stabilize at those levels without any without any catalyst to drive it higher.
Looking then at the overall sentiment overnight, what did you think? I mean, is there a sense that really markets are just, they're weaker, but there's also a sense of sort of a pause and wait to see what happens with a lot of these risk events coming up?
Yeah, absolutely. I think with the Aussie dollar was one of the standouts. It actually made a bit of a move higher, but of course it had been really sold off over the past week, so I think it was a bit of a relief rally and short covering over there. And as well with this unemployment data due out today, I think everyone's thinking let's be a bit cautious on the Aussie dollar. It's had a steep slide. Maybe we could see these jobs numbers impress and we could see a temporary spike in the Aussie dollar, but I think the overall strategy will continue to be selling into strength, particularly into those 1.03 levels should it spike on the jobs data. On the other hand, should it continue to slump, everyone will be watching that low support from Monday, which is about 1.015. So there are quite a few levels to look out for on the Aussie dollar, but it just seems like risk has run out of steam at the moment. Most risk assets are in a holding pattern as investors look for the next catalyst to drive markets in any direction.
Overall, for the ASX 200, what's your call? What's IG's call then for the local market open?
Well, we're actually looking at a drop of about 0.7% to about 4457 this morning. So that's quite tricky because of course we've got that previous resistance at around 448, which is now near-term support, I suppose. Yesterday we did see a similar price action and found buyers at around these levels. So we could see buyers start to creep in. Of course, it does seem a little bit overstated to see the market drop straight through this level without a catalyst. Of course, some might think that Spain downgrade might be what markets were waiting for, and this might spook the buyers a bit more. But I think locally we could probably hold these levels. It doesn't seem like sentiment is quite that bad at the moment, and of course we will be eyeing that local jobs number to see what happens with that. Just looking at some of the miners, we've got BHP called down about 0.6% as well, so that's at about 33.26. So it does seem like that's the general fall we'll probably expect from the resource space. Of course, iron ore managed to actually creep higher, marginally higher overnight, to about 117.70. So that might support some of these iron ore names a little bit. We did see Fortescue fall back a bit yesterday after the previous day's rally, stalled at around $4. So that might be another key stock to watch out for. But other than that, we've got that key ruling on from the ACCC on that News Corp, Consolidated Media and Seven Group takeover bid. So we'll probably continue to monitor the wires for that. There have been some analysts just calling for Seven to not be allowed to go through with this takeover bid. So we'll have to see what happens there.
Absolutely. Lots to watch out for, Stan. Thanks so much for your analysis.
Cheers, Brady.
Well, the House of Representatives will vote this morning on legislation